Business 163, Personal Finance. We are now on our fourth video in this module on taxation. And I just want to say at the very outset, if the tail end of the last video sort of has your head kind of spinning and you're thinking, man, I really got to sit down with a pencil and paper and a calculator to figure out what he's saying, then don't feel alone. I'm sure that there are many of us in this class who the first time you encounter, well, how do tax brackets actually work? And how do you calculate tax owed? It can be a little confusing the first couple times. But as you work through it, you'll see that the system is actually, well, pretty logical. It does really make sense, at least conceptually, right? And so you'll get the hang of it very, very quickly. But in this video, what we're looking at is going further on as we talk about calculating federal income tax, the tax that we owe at the end of the year for the income that we've earned. We're looking at this particular video in greater detail at how taxes work themselves out. As you can see from the title slide, we're considering in this video taxable income, tax deductions, and tax credits. And so now we're getting very specifically into things that we consider, and we consider planning to maximize our deductions and credits in order to reduce the amount of tax we owe. And this is really sort of where the rubber hits the road in personal finance. We're not just trying to turn you into folks who understand in general how taxes work. We want to use that as a foundation to really talk specifically about strategies and ways to understand tax deductions and tax credits in order to reduce the amount of money that we pay out every year in income taxes. So, this next slide introduces to you this whole idea of how do we work through the basic income tax form known as the 1040 U.S. Individual Income Tax Return. This is not a class to teach you how to do your taxes, but at least conceptually, we use the tax form to show you how to minimize the amount of tax you have to pay. So if you look at the Form 1040, and you may have to download the deck and study this little illustration here, what we've shown you here is that there's a section here that calculates all the income you earned throughout the year and makes some adjustments, which we here call deductions, or more specifically, above the line deductions. We'll talk about that in a second, right? In order to calculate our adjusted gross income at the bottom of this page. So you sort of see here, the section that's highlighted in blue is income. The section that is highlighted in that orange color are your adjustments, and you take your income, you subtract your above the line deductions in order to arrive at your adjusted gross income. Now, what is all this talk about above the line and below the line? What the heck is that about? Well, the line is adjusted gross income. It's that line at the bottom of page 1. And so above the line, those are all deductions that will reduce your amount of income to calculate your AGI. Well, what kinds of things are those? Well, those are things like retirement plan contributions, health savings accounts that your employer may offer you. If you have your own business, it might be the business expenses that you deduct from your business income. If you are divorced and paying alimony, any alimony paid can be declared as an above-the-line deduction. If you're an instructor like me, educator expenses. If you're a student like you, any student loan interest you're paying or tuition or additional types of educational expenses, those are all declarable as above-the-line deductions. So you sum up all your income, you get to adjust or deduct all your above-the-line deductions to arrive at your AGI, or your adjusted gross income. Now, from there, what about below the line? Well, below the line, primarily two things happen below the line or after you calculate your adjusted gross income. Number one is your itemized or standard deductions And once you subtract your itemized or standard deductions from your AGI, you arrive at taxable income. What are itemized or standard deductions? Well, those are kinds of things like your medical expenses, if you're paying a mortgage, your mortgage interest, if you own a house, your property taxes. Those are all kinds of things that if you choose to itemize, you would add up. However, the tax code has always provided a pretty large amount that you can simply declare as a standard deduction. So if your itemized deductions don't add up to enough, you'll typically take the standard deduction, a standard number that the government allows you to reduce your AGI by to arrive at your taxable income. Now, once you arrive at your taxable income, another below the line subtraction you can make is tax credits. Tax credits are not deductions, though. Tax credits are a completely different animal. How do we understand the difference? Here you see the difference between tax deductions and tax credits. A tax deduction is like a coupon. You hand the store the coupon before they give you the total that you owe. And in a similar way, tax deductions are things you deduct from your income to reduce your income before you figure out, well, what's my final taxable income I'm going to calculate my taxes on. But you see how that's different than a tax credit. A tax credit is like, well, a store credit. You receive one-for-one reduction of cost after you figure your total, which means if you have tax credits that are worth more dollars than the tax you owe, the federal government gives you back that money. If you have $3,000 in tax credits and you calculate the tax you owe is $2,000, that $3,000 in credit not only wipes out the $2,000 in tax you owe, but the government will send you a check for $1,000. You see, there's a vast difference between tax deductions and tax credits. So, you take your AGI, you take off your itemized or standard deductions, and you arrive at your taxable income. Your taxable income is what you base your taxes owed on. Remember from the last video we talked about figuring out based on taxable income, the marginal tax bracket, part of it gets taxed at 10%, part of it gets taxed at 12%, and on and on and on. Then you figure out the taxes you owe. And then finally, from the taxes you owe, you figure out how much of that you got to pay. Because remember, based on the W-4 form you filled out when you got hired, some of your paycheck has already had income tax taken out of it, right? If you declared federal tax withholding, part of your paycheck got withheld for tax withholding, which means typically your tax owed is tax due after you subtract the amount of tax you already paid in your withholding. Now, of course, many of us, especially early on in our careers, the amount of tax that got withheld is more than the tax that's due. That's where we get a tax refund from, right? And also, you have a second opportunity with different types of tax credits to reduce the tax due. All right? Now, this you will need to carefully work through if you're really interested how this stuff all works, right? By downloading a copy of a 1040 and working through it, or by working through some of the online calculators that we've given you to sort of just work through what are the typical implications of these kinds of things, what are the different types of tax deductions and tax credits. And of course, in the next lecture, we're going to talk about how different types of investment strategies for retirement will affect your taxes owed, your adjusted gross income, the deductions above the line that you might be able to take advantage of. And this is where this all sort of folds together in terms of personal finance strategy. When we talk about preparing for retirement and retirement savings plans, this is where we really begin to take into account, is this particular type of retirement account going to affect me above the line or below the line? When are taxes due or paid on this retirement savings money? This is complicated stuff, and I understand if you're really sort of taking this slowly to understand how this all fits together. This is, if you are an accounting major, a whole series of classes in and of themselves, how to figure out your tax obligation for yourself and for those you might prepare tax forms for, right? So this is intended primarily just to give you the general flow of how the tax form works, and therefore conceptually, how do we figure out what taxes are owed, and therefore plan strategies for how to reduce that over time. All right, so I hope that's helpful. If you need to go through this video explanation a couple of times just to sort of get it under your fingertips, it's totally understandable. And of course, as always, if you ever have questions about this stuff, don't hesitate to holler. I'll try and clear it up for you. But this is a very important set of concepts to understand how to plan for minimizing your tax obligation. All right, hope that's helpful. We'll see you in the 5th and last video.